Hey traders, Marcello here, founder of the Day Trading Academy. Today we're going to be answering your questions from this episode of Ask Marcello. Don't forget to subscribe. Turn on that little notification thing, see if I answered your question. I obviously love to answer all you guys' questions. Good ones so far. You even asked me about my girlfriend. Good stuff. Today, and if you're going to leave a comment or a question, just make sure you leave it with hashtag AskMarcello. 2 L's, no C. No, sorry, 2 L's, no H. All right, so from Halim Haddad. Halim asks, as a beginner trader, how much should I make in percentage of gains in a month to know that I'm a good trader? For example, if I have $5,000 capital, how much should I make in a month to know that I'm on the right path? Sorry about my English, and thank you so much. Halim, I think this is a very subjective question because day trading results, and here's the CFTC disclaimer, are very variable, right? Just because you make money in the past, even if I tell you that traders have made $1 billion from the last 10 years, doesn't mean that you're going to make that in the future, right? So the results vary because the market varies over time, and most people don't realize that a market from one day to the next can literally explode in volume and volatility. So the rule that I always tell people for our strategy, obviously I can't promise you that you're going to make this money because it depends on you, but I always tell people that you can make an average of about $100 a day. Just assume about 100 a day. You can have losing days, losing weeks, but overall it can average about that month. And full disclosure, I've had traders that make a lot less than that, right? I've had traders that make about $50 a day, about $20 a day. So it really depends on a lot of things, Halim. And it really depends on not only the kind of market you're going to get, but also the kind of trader you are. If you're a more of aggressive trader, obviously you're going to make a lot more money. If you're a more conservative trader, you're going to do a lot less. I think the definition at the end of the day is just being consistent, Halim. So I would focus less on the amount of money you should make than the amount of consistency or decisions you should have. And what I mean by that, Halim, is it doesn't matter if you make $1 a day. It doesn't matter if you make $5 a day. It doesn't matter if you make $1 billion a day. At the end of the day, if you're making the right decision, the money will come. So this is why, people ask me all the time, well, what should my goal be if I should make X amount of percentage, like you're asking me now. It doesn't matter what percentage you're making, because if you're making the right decision, then you're going to be making money, right? So I never looked at percent return on positions, because when we trade in futures, we generally look to make this a living. So the reality is, well, how much money can I make? Once you get to the point where you're a consistently profitable trader, obviously the goal of getting into the market, or the goal to start trading, is to make money. Once you get to the point where you're doing it consistently, the amount of money really doesn't matter anymore. It really comes down to kind of beating the market or becoming better as a trader, so to speak. So when you ask me that, I just dropped the chair. When you ask me that about how much money a good trader should make, I'm just rereading your question here. It's not about the percentage of money you can make a month. I would say it's really about the decisions you make, because if you focus on a certain amount of money, you're going to try to force yourself to make that amount of money, right? So let's say you want to make 20% a month. If you're fixed on making 20% a month, you're going to make mistakes trying to get to that 20%. Whereas if your goal isn't necessarily 20%, it's just being consistent, making good decisions. One month you might make 2%. One month you might make 500%. But at the end of the day, it doesn't matter, because you're going to be living off of this, right? So that's the mentality that I use, and focusing on money is definitely the wrong decision, Halim, because I'd like to know where you're from, by the way. I think you're somewhere in the Middle East, most likely, right? I can't see your background. But I think that you need to make sure you focus on the right things, because if you focus on the wrong things, it's going to end up very bad for you, because if you focus on the money, you're going to connect emotions to the money, because obviously nobody wants to lose money, right? And that's when you're going to start making bad decisions because your emotions are involved. So keep that in mind, my man. Okay, good question. From Eunice Sand, can you tell us what is penny stocks all about, and it is like some other market or what? Please clarify. So Eunice, the legal, or the correct definition, from what I understand it, I haven't looked this up, I probably should before I make a mistake. Penny stocks are essentially stocks under $5, and I'm gonna look this up for you just to explain it to you. But at the end of the day, the definition of it is less than $1. That's why they call them penny stocks. So the reason why they call them penny stocks is because I'm sure you know what stocks are. I'm kind of going in circles because I don't know where to start this conversation for you. The legal definition is that there's stocks that are under $1. From I don't know why I read somewhere, yeah, it is $5. So I'm reading this off of a definition. The SEC considers a penny stock to be pretty much anything under $5. But in the market, we consider anything under $1. Penny, right, meaning cents, anything under $1. So they're not a completely different market, so to speak. They're technically stocks. They're just stocks that are a lot lower in value. Typically, they're a lot more volatile because on one hand, it might be a company that isn't really that good, so the values are just cents on the dollar. I did really well trading penny stocks in marijuana a few years back. It could also be a company that was really, really established and isn't that good anymore, right? Isn't that reputable anymore, and then the value of the stock goes down to under $1. Typically, the way that people make money with penny stocks is catching the breakouts, two different ways. So if there's one that breaks out, you can catch the breakout on the long after it breaks out. And typically with penny stocks, you have to be a little bit careful because it's a little bit risky if you don't know what you're doing, because they have a lot of things called pump and dumps. And that's essentially where celebrities, other kinds of people will pump the stock, right? They'll promote it and it'll go up. And then after everybody realizes that it's not that valuable, everybody will go short and then it'll come back down, the dump. And so the other way to play it is to go short after you get the indication or the entry pattern for the dump. So those are really what penny stocks are. They're not really that complicated to understand. I've traded them, especially during the marijuana. I played them long, not short, the way that majority of people play them. But that's really just a different market. They're technically stocks that are just under $1. Good question, Yunez Saman. There's a difference in my opinion about applying stop losses in trading. While some say that stop losses is a sure loss and brokers will hit the stop loss and take away your money, the other argument is that stop losses is essential, and if you fail to put a stop loss, you will forfeit your account. Can you tell me which one is reasonable? I'm not against the idea, Saman, of brokers actually seeing where your stops are and going in and taking your money. I actually think both of those statements that you stated are correct. I do believe that having a stop in your trading is better. So the second part of your question where you say that it's essential unless you're going to fail, that's really more my thinking, because we teach, for example, trend trading, right? And so that basically means that we trade with the trend. So if you're trading with the trend, you're not really going to worry as much about your stop loss. Does that make sense? In a more longer time frame, maybe. But there are professional traders and institutions that manipulate the market and stop out people as a whole. That was the microphone. Stop out people as a whole. They're called bull traps or bear traps, right? You can actually understand the dynamic of the market where you can see where the market goes up or down and why they do it, right? If there's an area here that the market keeps going against and the market breaks out, well, you have to be careful because that might be a fake out breakout. So a lot of times when people come up and go long at this area again because it was resistance, they'll bring it back down. So there's ways to understand market manipulation and make sure that you trade the way that you're supposed to, etc., etc. But I would highly recommend trading with a stop. I would not recommend anybody trade without a stop, because a lot of times when you learn how to trade, it's a very emotional endeavor, Saman. So you want to make sure that you protect yourself in a certain way, because when your emotions take over, you literally do things that you don't know that you're doing without doing them until after the fact, right? You say, oh, I'm so stupid. The best way that I can explain it to you is when you go and talk to a woman at a bar, right? If you really like the girl, you kind of you start your words, you start mumbling, or you don't say the things that you should because your emotions are affecting the way that you're going about it. So I would definitely recommend trading with a stop. I would never ever trade without a stop, even though I have done it and paid the price. I've had situations where I've lost over $50,000 in silver. I believe that was 2014 or 15. We're in 2017, 16, 15. I think that was 2014 or 15. Because I thought that silver was going to rise, and I kept buying it, and eventually it just kept going down. So I had to close all my positions before the contract expired. So that's what I think about the stop losses. I hope that answered my question, my man. If you guys have any other questions, don't forget to mark them with Ask Marcello, and don't forget to subscribe.